Thank you, Sam. Good morning, everybody. Thank you very much for coming this morning, this Friday morning, that was sandwiched between a weekend and a public holiday. We had to also be very careful about the numbers of people we invited because of what we all know, the pandemic we're going through. But thanks very much. We got good representation from very many sectors, sub-sectors of the capital markets authority, capital markets. We've got representatives from the intermediaries. You can just wave, show your hands. Don't stand up, just show your hands if you're an intermediary. We've got representatives from obviously the CMA staff. I saw them at one table, two tables. The media, of course. We've got the CMA board, representatives from the board of the CMA. Thank you very much. 4 board members were able to make it. We appreciate that very much. Any group I've left out, of course, National Planning Authority, FSD, Uganda, Rashmi and Joseph. Anybody else I've left out? Yeah, all right. So this morning's event really is just to formally announce to the public and to all of you that we have officially launched, we're going to launch the strategic plan for the next 4 years. Why 4 years? Because we have to align ourselves to the third National Development Plan. Normally it's 5 years, but we had to align ourselves to the third National Development Plan. This plan also is also a constituent part of the 10-year Capital Markets Master Plan that was launched 4 years ago. So far we have done about 18% of the master plan. We expect to complete about 40 activities out of the 87 activities in the master plan over the next 4 years. But this one, and the master plan really constitutes about 35%. CMA's input into the master plan is about 35% of the entire master plan for the industry, which really affects the intermediaries, the stock exchange, the central bank, the Ministry of Finance. We're waiting for a representative from the Ministry of Finance, but we had to start. But it's really the blueprint that is going to help us to achieve frontier market status as per the Morgan Stanley Capital International. And the significance of achieving that status is that you're able to attract a group of foreign investors who would otherwise, ignore a country that has not been classified. It's a vote of confidence in the fact that you've got sound and strong operating systems in your entire capital markets ecosystem. You have a certain scale. I think it requires that 2 companies of at least $700 million are listed on an exchange in your country. So all our interventions are focused on achieving what is required to achieve frontier market status. I know some countries are talking about graduating from frontier market to emerging markets, but we are just trying to get into frontier markets. So the strategic plan is from 2021-22 to 24-25. It is where we're coming from. The previous plan covered the period from 2016 to 17 to 2020, 2021. And the objectives were facilitating and promoting the development of capital markets, enhancing and regulating an efficient ecosystem, capital markets ecosystem, and enhancing CMA's human capital. Now, these 3 objectives don't change very much from year to year because they're really enshrined in the Act, the CMA Act. But what changes really is where the emphasis, it's the levels of emphasis we place on the different initiatives, as you will see later on. The theme of this next strategic plan is fostering inclusive growth, protecting investors. But before I get there, I'll just go quickly to the outgoing strategic plan and just highlight some of the key achievements of the last strategic plan. In a sense, whatever takes place in the industry, we sometimes sort of claim some benefit because many times we're the ones who authorize some of these transactions or approve some of these transactions. So the first was the 471 billion was raised by 3 companies. 2 secondary offers by DFCU, 191 billion, and Umeme at 113 billion. And then the CIPLA IPO that you all remember that took place in 2018 that raised 167 billion. So 471 billion was raised, and this was only through equity offers. We also launched an issuer education program that initiated the capital raising of about 41.8 billion by 3 companies. We were able to reach about 30 companies through this program but we're glad to see that 3 of those companies have now graduated to the next stage of capital raising as a result of this issuer education program. We also launched the public education program and reached out to over 165,000 potential investors in Uganda who opened up, and some of them opened up CIS accounts, collective investment scheme accounts. The total assets under CIS management grew from 55 billion in 2016 to 498 billion at the end of in December 2020. We also saw Cabinet approve the National Broadband Policy, which is a very important policy because it has made it mandatory for telco companies to list on an exchange in Uganda. And we expect this to happen quite soon, as will be elaborated on later on by my board chairperson. We've also seen support from the ministry. I mean, really, it's a vote of confidence in the way the Ministry of Finance views our contribution to economic development. Several lessons were learned. It's never all rosy, because I know that by the time this year ends, in a few weeks' time, we'll have achieved about 80% of the strategic plan. And there's several lessons learned that we want to now import into the next round of plan implementation. And most of these are really to improve internal efficiencies within and across departments, within the organization, building a leadership team, a pool of leaders, the next generation of leaders in the organization. We want to go electronic. I think the COVID pandemic has really shown us the need to electrify many of our processes, to digitize many of our processes. So we're in the process of implementing an electronic document and record management system, which we hope will also help with licensing. And we hope that this will lead to electronic submission of license applications. We also want to launch a human resource talent strategy to develop the next pool of leaders, as I said earlier. The theme of this next strategy is fostering inclusive growth and protecting investors. And the word inclusive was deliberately added because we don't want the capital markets to remain the preserve of a few high net worth individuals and those few Ugandans who are able to save. We want to really see the capital markets help create jobs and essentially bring in more people who can use financial services. So also we're trying to emphasize the issue of inclusive growth as much as possible. And the new vision is to be an innovative, efficient, and trusted regulator of a regionally competitive capital market. Now, regionally in this case is not East Africa. Regionally in this case is Africa. Then the mission is to foster transparent, accessible, and effective capital markets in Uganda. This mission has not changed. It remains the same and is largely what is enshrined in the law. The values haven't changed. They remain accountability, excellence in whatever we do, teamwork, and integrity. And integrity goes beyond simply being honest. It also involves being courageous in decision making. You know, sometimes if you're just honest but you're not courageous, it's not very helpful. So we need to be bold as well. The CMA input into NDP3 is highlighted there. I won't spend too much time on it because this is going to be incorporated in the strategy. But let me just sort of touch on it briefly. We are under the private sector development program of the third national development plan. And one of the key results under this program is to increase non-bank lending to the private sector in key growth sectors of the economy. To a large extent, our economy relies on bank financing. I think it's at about 65% of the total amount of money in circulation, but it's still only about 17 to 18% of GDP, which is quite low. But that's also a function of the level of money supply in the economy, which is still quite low in comparison to our neighboring countries and other emerging markets. So we want to see more business enterprises rely more on market-based financing to grow their businesses, to finance the growth of their businesses, as opposed to, and market-based financing really encompasses many areas: private equity, bonds, commercial paper, and eventually perhaps listings, should they choose to go that route. So the initiatives proposed to increase the uptake of market-based financing include development of an enabling legal framework for alternative financing avenues like domestic private equity and crowdfunding, establishment of a deal flow facility, and you'll be hearing from Rashmi of FSDU, Financial Sector Deepening Uganda, who will be the implementing partners supported by the European Union in this important venture. We also want to see the establishment of a bond market forum. Now, here it's not just about debt liquidity. The bedrock for the development of capital markets is the bond market. If you don't have a developed bond market, you can't develop an equity market. So we want to see more liquidity in the bond market. And that's why we want to see this bond market forum established together with the dealers, the central bank, the savers, the collective investment schemes, the NSSF and the likes, just essentially as a self-regulatory organization, ultimately, to encourage, to really hold them to account to a set of rules on how they should be dealing with each other. We want to continue to enhance our public education drive that will be geared towards increasing the collective investment scheme assets. We found this as a very good channel for getting all walks of life involved in the financial markets. It's very difficult to encourage small savers to invest directly in listed companies. So we thought it much wiser to encourage them to invest in unit trusts because these really have the potential of aggregating. You're able to invest as little as 100,000 shillings every month for 5-10 years in unit trusts, and ultimately it grows, mainly on the back of the power of compound interest. And that's why we've taken a lot of interest in this particular sphere, and the figures speak for themselves. The plan has got 3 main objectives, which haven't changed much, but the first one is to strengthen capital market regulation and oversight. To strengthen capital market regulation and oversight. Now, the second one is to achieve institutional excellence. We strive to be our best versions of ourselves. We strive to be the best versions of ourselves for the market, in serving the market. And the third one is to promote economic development in Uganda by creating a competitive and inclusive environment for businesses and government to access market-based or non-bank financing. To a large extent, the government has already been accessing market-based financing, but we believe there are many other opportunities for government to do so through, for example, project bonds. Most of the infrastructure projects, for example, the power plants have been financed through direct lending, but we believe there's a scope for improvement. We believe that projects, special purpose vehicles that build power plants, for example, can issue bonds, corporate bonds, or project bonds, or even existing infrastructure projects can refinance some of the existing debt using project bonds. So there's still a lot of scope for growth in this area. These objectives have 9 initiatives and activities intended to help achieve the key result areas and outcome indicators as indicated in the detail of the strategic plan, which is on your desks. I'll go briefly through the 3 objectives, the 9 objectives. The first one is promote proper market conduct by strengthening the effectiveness of the supervisory framework. And this is really to do with 22 or 23 intermediaries we license and the approved persons, just to really make sure that they're conducting themselves professionally and they're giving the right advice. So we're going to be stepping up our supervisory role in that area, all with a bid to improve the effectiveness initially before we now graduate it to sanctions for non-compliance. So this is just to put you on notice that we shall be stepping up our supervisory effort in that area. The second one is to develop appropriate regulations and amend existing laws. And the operative word here is to be a lot more efficient in this process. We all know that it takes time to change regulations and laws, but we really want to find mechanisms where we can do this a lot more efficiently than before. We need to be a lot more responsive to changes in the market environment and in reacting to getting the laws and regulations to respond to these changes more swiftly. And the third is to undertake swift enforcement actions for all market misconduct incidents. Now, during the prevalence of the pandemic, there's so many schemes that began offering all sorts of returns to Ugandans. And we just want to warn the public not to deal with persons who are not licensed by the Capital Markets Authority, by the Central Bank, or any other regulator. There's the Retirement Benefits Authority here. For goodness sake, do not deal with anybody who is not licensed or approved by any of the regulators. You're doing so at your own risk. So we want to be able to undertake swift enforcement actions against this sort of misconduct to serve as an example that this is not acceptable in our economy or in our country. So objective number 2, to achieve institutional excellence, we want to develop and implement a human resource talent strategy. I touched on that earlier. We want to improve the financial sustainability of the authority. We largely rely on the Ministry of Finance or the government for support. The government contributes about 2/3 of our budget. We want to see this reduce if we can increase the funding from the industry. Now, don't worry, we're not going to increase fees. We're not going to increase fees. In fact, in the recent license fee regulations, we saw a reduction in fees, right? So there will be other creative ways of earning some revenue, which we shall disclose in the course of time. Then the third one is leveraging on technology to drive efficiency in the capital markets ecosystem. Again, the pandemic has shown us that it's inevitable for us to have a strong and robust digital modus of operating. The third one is to promote economic growth, development. Now, the first objective there is to enhance awareness campaigns to increase individual and institutional investment in securities. We've been doing this already, but we just want to enhance this. We want to step this up and get more individuals to invest in financial assets as opposed to the traditional hard assets, which I've given examples of before several times. Like the real estate, there's so many ways in which you can invest in, and the benefits are that investing in financial assets, they're much more liquid. Again, these economic downturns that we all go through from time to time have shown us the need to diversify portfolios, hence the need for us to focus on this area. The second is to enhance awareness campaigns to increase business and government access to market-based financing. We realize that there's so many businesses out there who think the only way they can raise money is through banks. We need to step that up. And that is why we want to establish a local regime for licensing private equity funds, tax-free. Right now, they're all domiciled in Mauritius. There's a reason why. Why can't Uganda be the next financial center for East Africa? If we did, small things like this, establishing a regime that enables private equity funds and other fund managers to be domiciled in Kampala. So this is in the NDP3, and we hope that it will be implemented. It will be fast-tracked because it's an important requirement, even for the institutional investors, the retirement benefit funds, to invest in private equity funds. Right now, there's a restriction on retirement benefit funds investing in only those domiciled in East Africa, and there are very few that are registered in East Africa. So we need to create this environment because savings from NSSF and other retirement benefit funds can be channeled to private equity funds and then deployed into the real economy more efficiently than if these pension funds try to invest in businesses directly. Hence the importance of this awareness. And then the third is to step up capital markets policy engagements. Now, I know policy engagements might sound very general, but the foundation of our policy engagement framework is the master plan. The stakeholder engagement plan is really founded on the master plan, the capital markets master plan. We've got things that we know we need to achieve in the master plan, so every time we engage with a stakeholder, we know what we want to achieve out of this engagement. It's not just to be visible and in their faces and be nice to them. We might be lucky and one engagement will achieve whatever we're looking for, but it might take multiple engagements. But the difference is that we're going to be having a stakeholder engagement plan that is very focused and deliberate about achieving results, hinged on fully implementing the master plan. We're coming to the end. The expected results from all this effort in the next 4 years is outlined. On the left-hand column is our mandate that is more or less the same, so I just want you to focus on the right-hand column. I think we set ourselves a conservative target of 1 trillion in 4 years. This target is going to be achieved much sooner. So I'm glad some of the CIS managers are here, like UAP. I don't know where we are right now, but we've already passed 500 billion. But I think we're going to achieve this target in next probably 1.5 or 2 years. We also want to reverse the declining trend of domestic market capitalization to GDP. Now, the reason we framed it this way is because the GDP from time to time may face rebasing. So if we hard code this number and the GDP is rebased, then we're working off a much larger denominator. So we just want to reverse the declining trend. And I believe with the national broadband policy and other policies that we're working with the Ministry of Finance on, this is going to happen. We also want to contribute to the increased uptake of market-based financing. I won't dwell on this. I talked about policy actions. We want to see one policy action favorable to development of Uganda's capital markets approved every year. So here we're talking about big-ticket policy actions to present to the cabinet through the Ministry of Finance or the Minister of Finance. So that's the goal we're setting ourselves. We also want to see a fully functional prosecution unit set up in the CMA. We want to revise the CMA and CIS acts and regulations to fully operationalize this, and also fully operationalize these revised acts. And want to see at least one SRO, self-regulatory organization, approved by CMA. There are two that are in the pipeline. I think the Bond Forum might graduate into one, as I said earlier, and the second one could be the crowdfunding platform. Again, it's best if this is done through a self-regulatory organization. So we hope to see at least two of those established. Our law mandates us to approve SROs. Then the third one is to improve investor and stakeholder perceptions of CMA by at least 5% annually. We've just done a stakeholder and investor perception survey, and we hope to see an improvement in the results on an annual basis. Obviously, when it gets to about 80%, 5% might be difficult to achieve, but we want to give ourselves those ambitious targets. So whenever we come to you and ask you to participate in these surveys, please don't feel bugged, don't feel harassed by us. It's to help us to improve our service delivery to you. We also want to see an annual implementation of at least 95% of the operating plans, which really form our dashboard on an annual basis, and want to automate all these processes as I outlined earlier. So ladies and gentlemen, I'm coming to the end, but really this is just a summary of some of the things we would like to see done as CMA. We won't do this on our own. We need your support. We need your cooperation. Intermediaries have been wonderful to a large extent, because it's through intermediaries that all this gets done. We don't get into the market ourselves. Much as we might have all this knowledge, we don't get into the market ourselves. We rely on the intermediaries, and through working with our research department, our communications department, to get all this done. So thank you very much, and I look forward to a successful 4 years. Obviously, the staff of CMA are key in implementing the strategy, and I want to thank them so far for what has been done in the past. I hope when we meet again in 4 years' time to assess our progress, the same staff will be here to celebrate our achievements. Isaac has been very instrumental in this whole process. Isaac Sechitoleko, he's the planning manager. He's been really instrumental in the whole development exercise. So Isaac, I also want you to stand up. Out of all the guys here, it is you I want to stand up. So thank you very much, and God bless you.
Thank you, ladies and gentlemen. Can I have an additional round of applause for Keith? Thank you very much. We are running a little bit short of time, so without any further delay, I'm going to request Rashmi to come forward and give us, a breakdown of what Keith just said. Thank you, Rashmi. Thanks.
Thank you, Sam. Let us see. Good morning, ladies and gentlemen. All right. Keith was significantly smarter and had his presentation printed out. I might have to keep twisting my neck in that endeavor. Let me also take this time to recognize key representatives here from the Ministry of Finance, the board chair of the CMA, board members of CMA, the CEO Keith, representatives of the National Planning Authority, the Uganda Retirements Regulatory Authority, colleagues from the industry. You're all welcome. It's a pleasure to be standing before you at this momentous occasion, which is the launch of the CMA's new 4-year strategic plan. This is also the year where CMA marks its jubilee, 25 years of existence, so congratulations, Keith, the CMA staff. My role here as a discussant today is to break down Keith's plan and Keith and his team and the CMA team's plan and say, how is this relevant for people and businesses? How is this relevant for nation building? And how can we be part, as Keith asked us for our support, so how can we be part of this plan that the CMA has put together? I'm hoping that Keith and his colleagues will accord us a few minutes for some discussions post my presentation so that it can provoke debate and we can all come together in a constructive manner to further this agenda. So the theme of this 4-year plan is fostering inclusive growth and protecting investors. A bulk of my presentation, actually nearly all of it, is on the first part of this theme, which is inclusive growth. The CMA's strategic plan has 3 pillars. Keith was very articulate. He spoke about their vision for strengthening the capital market regulation and oversight to achieve institutional excellence. And then he spoke about promotion of economic development in Uganda by creating a competitive and inclusive environment for businesses and government to access market-based financing. This is what my presentation will focus on today. So as we go through the strategic plan that was put together, this pillar of CMA strategic plan links closely to the NDP, and it links to the private sector objectives of the NDP and how that can be achieved. If one of the things that I would like to bring us all back together when we look at the NDP is actually this chart. This chart is the explosion of the job requirement or job creation that Uganda needs in order to achieve the economic transformation necessary. If you look at the chart in 1992 to 2014, those years we were 316,000 employable people coming into the market. The labor force explodes. It doubles between 2014 to 2030, and then triples between 2030 to 2040. Ugandan businesses will need to create jobs that match that rate of labor force development. Access to capital is one of the key binding constraints to SMEs that employ this vast majority of people. Alternative financing through the capital markets have the potential to reduce the massive SME credit gap in this country. So coming back to the NDP 3, if the CMA strategic plan, the targets in the strategic plan when it comes to non-bank financing, which is accurately identified as a very big aim, a key goal, it's ambitious and wants to push it to double by 2024-25. It proposes to achieve this in 5 ways. By strengthening the legal and regulatory framework for PEVC, undertaking public education and communication campaigns with a focus on the growing CIS industry, empowerment of market participants and intermediaries, supporting the development and operationalization of the deal flow facility, including PEVC firms as part of the licensing regimen, and building capacity to respond to and support activities of fintechs in Ugandan capital markets. So let's just examine a few of these in depth. Okay, the first is an enabling environment for PEVC. Most companies and SMEs in Uganda look for short tenor bank financing. It's expensive, does not match the long tenor ambitions of the firm. PEVCs can provide long tenor growth capital through equity, quasi-equity, debt, and into investment-worthy companies. Recognizing the need for non-bank alternative finance, CMA has already embarked and shared draft regulations to capture this change. Additionally, as Keith mentioned, CMA and the European Union have partnered with FSD Uganda to set up a matchmaking deal flow facility. This deal flow facility is expected, in short, the ambitious aim in the 5-year of the existence of the deal flow facility is to see 40 deals closed over a 5-year period, with 100 companies made investment worthy enough to match with potential investors. talks about a legal provisioning for close-ended funds, and Keith can correct my understanding on that. But the current collective schemes are open-ended. Investors can enter and exit at any point. Fund managers have to be in a position to liquidate at relatively short notice, and this has a direct implication on where they park their money and the type of securities that they invest in. Close-ended collective schemes have an initial period of capital raising. The fund manager is not obliged to redeem shares or units of members who wish to exit the CIS. These fund managers or these schemes can invest in less liquid assets, especially those of small and medium businesses. However, the question this raises is as follows. How ready, and the CMA team will educate us, is the market, how ready is the market for close-ended CISs? How ready are fund managers to deal with the due diligences of these businesses and ascertain their risk profile and be able to deploy investor capital efficiently at a premium that's far higher than current government borrowing? Alternatively, CISs could choose to invest in growth of non-bank financial institutions that directly support SME growth, like MFIs, factoring companies, leasing companies, and similar such non-bank financial institutions. The other question is, are such businesses ready for disclosure and the investment and the information requirements that might come with this option? What competencies and conditions are necessary for a fund? Or are we going to see a situation where capital is parked with already large formal businesses, namely financial institutions that have more readily available information, thus diluting the objective of alternative financing options for SMEs? Continuing on the same discussion of SME loans, SME loan securitization is a financing technique that allows the transformation of SME loans, which are illiquid in nature, into tradable securities. To this end, a loan originator like a bank can package SME loans into a portfolio, sells the portfolio to capital market investors through issuance of securities. These securities are backed by the loan portfolio, which is asset-backed securities. They have the potential to reduce growing SME financing gap. The question for us here would then be, what would it take to see more of these types of issuances? What enabling factors and incentives need to be in place to take this through the capital markets? One of the last points that this strategic objective mentioned was enabling fintechs in capital markets. We have seen a big emergence in several markets of platforms, new types of fintech models. I will not go into those with the exception of two, because they speak more pertinently to the SME credit financing gap. One is on the emergence of receivables-based platforms. They are electronic platforms that enable SMEs to sell their receivables directly to a range of investors. The platform acts exclusively as an intermediary that pre-screens the receivables using proprietary technology, but ultimately the credit risk is borne by the investors. In many cases, the platform also offers collection services. It can be both an originator and a servicer. The other is also lending platforms. Same principle, matching demand and supply. SME lending platforms are platforms that connect consumers and businesses to give loans directly to businesses from a wide range of investors. Their role is to pre-screen the loans through low-cost IT that allow them to collect standardized information from dispersed borrowers to assess credit risk. But ultimate decision to invest relies on investors who bear such a risk. So then that brings us to the question, are investors that we know today sophisticated enough? Maybe, maybe not. It is unlikely that individual retail investors are sophisticated enough to determine what is the best investment product suited to their needs. But the pension funds, investment clubs, very large SACCOs, and those that manage their money can use these opportunities and these platforms and innovative models to solve the SME credit gap in the country. One of the other things in the strategic plan, and the CMA team will forgive me for this, was a small paragraph called cross-cutting issues. My question is, are they really cross-cutting or are they central to the delivery of the plan? One is on gender equity and the role of capital markets. Studies have shown that companies with diverse boards and managements perform better. While a key dimension of diversity is gender equity. Having women on boards of companies and in management positions have statistically proven to improve the performance of companies. Can the CMA nudge or mandate that companies that have supervisors or lists should have diverse boards in order to be well-rounded and high-performing? Climate finance. The strategic plan talks of green bonds to finance projects with climate or environmental benefits. While this is necessary, it might be insufficient if we only think of it as an environmental benefit. It is actually extremely urgent that we look at this more closely to achieve the NDP 3 goals. One of the sectors with the highest employment and multipliers in Uganda is agriculture. Agriculture is suffering from the impacts of climate change today. Topsoil fertility is declining, yields are lowering, and smallholder farmers do not have the financing to make the long-term changes needed to counteract the impending impact of climate change. This means that in the medium term, we might witness lower take-home income for people directly employed by agriculture. Bank financing, which is short tenor and expensive, is not best placed to address this challenge. This challenge is worsened by encroachment into conservation areas that have a balancing and symbiotic relationship to agriculture. This is an area that urgently needs long-term finance. The next is on investing in Uganda's competitiveness. Export areas, commodities that Uganda is looking to increase its competitiveness, and the role of capital markets in those. For example, the Ministry of Agriculture embarked on a PPP with IFAD for an oil palm growth in the country. Oil palm, similar to many crops, takes 5 to 7 years to bear fruit. In the meantime, farmers need continuous input financing, farm management financing, and more. Development financing and capital markets can play an instrumental role in such areas. The other area that is key to any country's competitiveness are its people. A productive labor force is a fundamental ingredient to the competitiveness and economic growth of its country. COVID-19 has significantly impacted the education industry. What is the role of the capital markets in ensuring that financial instruments that invest in long-term growth of schools are fostered to ensure quality learning outcomes and thereby a productive and employable labor force? I end my presentation. Thank you very much for listening to me.
Thank you very much, Rashmi. Apologies for the sound. Okay. The CEO just said it right now. Very thought-provoking presentation. There were a couple of salient, we could say some major points to think about. And one of them is that Rashmi posed is the market ready for some of these innovations? We spoke about closed-ended collective investment schemes. I think if you listen attentively to Keith's presentation, one of the big desires of the CMA is to get patient capital into the real economy, and we're trying to look at creative ways to do that, to really drive Uganda's growth through low-cost capital. But Rashmi poses some important questions to do with gender, climate finance, and lots more. I can't summarize it all, but this is just a little bit of what she said. In preparation for this meeting today, we spoke to some of our players, and I hope the video team is ready. We just wanted to play some two very short videos that were shot, and just to perhaps answer whether the market is is ready for this.
About the new strategic plan for the capital market. My name is Catherine Namujuz Segunya. I work with Crested Capital.
My name is Catherine.
Can the volume be higher?
Segunya.
Yeah,
I'm
excited about the new strategic plan for the Capital Markets Authority.
Yeah, I'm excited about the new strategic plan for the Capital Markets Authority. The past 25 years have been good, but again, we're excited about the next couple of years coming ahead of us. And as a market, we look forward to seeing a market growing deeper in terms of listing. We want to see our contribution as a market to the GDP relatively bigger than what we have had the last 25 years. In that, I know that there is a deal flow facility that is coming up to make sure that they give enough support to companies that would ideally want to acquire more capital from the public. Yeah, so on one side, as we are preparing the companies that are coming to raise the capital, the public needs to know what is available to them. So for that role, I am also happy to say that I am an investor, education resource person for the Capital Markets Authority. And here our goal is to make sure that we come to you on every forum that we can, whether it's social media, it's in the print, or on radios, on the TVs, to make sure that we educate you on the products that are in the capital markets, the risks, but also the opportunities that you can take, so that when the companies come to list on the stock exchanges, you are aware of what opportunities are there and you can take them. So we look forward to a deeper market where there are very many options for you to invest in, but also that you invest now well aware that you have all the information that you need.
I am Joram Ongura, CEO of SBG Securities Uganda Limited, a subsidiary of Stanbic Uganda Holdings Limited. It's a pleasure to speak to you at the launch of CMA's new 4-year strategic plan. The capital markets in Uganda have come from far over the last 25 years, but there is still further to go. As SBG Securities Uganda Limited, we look forward to the initiatives the Capital Markets Authority has in the new strategic plan, as well as the deal flow facility. When we have more listings in the capital markets, it also means lower cost of capital, higher efficiencies for companies, new jobs, and prosperity for Uganda's economy. At this moment, I would like to thank the CMA, the stakeholders, and look forward to execution of the 4-year strategic plan.
Can we cut that?
It's a pleasure to speak to you at the launch of CMA's new 4-year strategic plan.
This is just a few. We had a couple more, but there's during the filming of these various clips, there seemed to be a willingness, a readiness, an excitement to to really expand the capital markets and get it to where it should be, as the fulcrum of growth and development and inclusive growth in Uganda's economy. Joining us today is Mr. Baker Kanyagoga Tumwebaze. He's the principal economist at the Ministry of Finance and Economic Development. He's representing the Commissioner, Financial Services Department. Yes, thank you very much for joining us, sir. Yeah. Ladies and gentlemen, now we get into the launch proper, and to get us into the real moment, the moment of the launch, is going to be the chairperson of the Capital Markets Authority, Ms. Jacqueline Kopsinje Opondo, and then we will have the chief guest, who's from the Ministry of Finance. So, without any further ado, please, a round of applause as Jacqueline takes the podium. Thanks.
Thank you, Samuel. I don't have a presentation like the previous speakers. I just have a few notes to share with us. Our chief guest this morning, the representative from Ministry of Finance, the members of the Board of Directors of Capital Markets Authority here this morning, distinguished guests, ladies and gentlemen, good morning. Well, it gives me great pleasure this morning to extend to you, on behalf of the CMA, our deepest appreciation for coming here very early in the morning, in between a public holiday and a weekend, to join us, obviously cognizant of the fact that you have various commitments, but that you chose to be here this morning. We are really grateful that you could make it. Today, we are launching the 4-year strategic development plan from 2021, 2022 to 2024, 2025 under the theme, as has already been mentioned, fostering inclusive growth, protecting investors. Ladies and gentlemen, as you have already heard from the two previous speakers, the capital markets are a central pillar in facilitating the provision of non-bank funding to finance Uganda's aspirations, and which are many. And these aspirations are of transforming a low-income country to a competitive upper-middle income country as envisioned in the Vision 2040 Master Plan. The capital markets does this by mobilizing individual savings from households, institutional savings from domestic and foreign retirement benefit funds, life insurance companies, and efficiently channeling these limited savings to economic agents, which put these into productive use, thereby stimulating economic growth, stimulating job creation, exports, and prosperity for all. And therefore, the main task really of the Capital Markets Authority is to ensure that these limited savings are allocated to those businesses that fulfill the requirements stipulated in the laws and regulations we oversee in order to generate income for the savers that have provided these funds through dividend income, interest income, and capital gains. The theme that is fostering the theme for this strategic plan, fostering inclusive growth and protecting investors, was carefully selected to signal the emphasis of striving to ensure that the activities of the authority include and protect a broad section of Ugandans. The new strategic plan builds on the successes of the prior ones. The CEO has taken us through the key achievements of the previous plan. And some of these include the launch of the investor education, issuer education programs, which have seen over 165,000 people being educated on investing in financial assets, and over 30 enterprises educated on how to raise capital through the capital markets. You will agree with me that capital markets is one area whereby unless somebody takes you through a step-by-step process, it becomes very difficult to appreciate the benefits. And so we have seen and realized that through this education program, the collective investment schemes assets under the management has grown from 55 billion to over 500 billion to date. And as you have seen, the aspiration is to grow this to over 1 trillion shillings over this strategic plan. The second one is the admission of CMA as a signatory to Appendix A of the International Organization of the Securities Commissions, which is an international organization that enables us to support and be supported in cross-border investigations. Thirdly, the government approval of the national broadband policy, which makes it mandatory for all the telecoms operating in Uganda to get listed on the local stock exchange as part of their licensing obligations. And we are glad to mention that this will happen in the next 4 to 12 months. Training of over 60 staff of market intermediaries in capital raising, collective investment scheme operations, and corporate governance. rollout of the Capital Markets Industry Certification Program for market intermediate staff in conjunction with the Chartered Institute of Securities Investment. To date, over 100 Ugandans have completed the obligatory second level. All this was accomplished despite the effects of the lockdown and the lingering logistical and travel restrictions resulting from the COVID-19 pandemic that we are still experiencing. As has been mentioned again, in the new strategic development plan, the board will continue to ensure that the focus on initiatives to 1, strengthen and improve efficiency in the regulation and oversight, 2, improve institutional capacity and excellence, and 3, increase business and government access to market-based financing is done. And this will be done through leadership development and talent management, issuer education and support for the deal flow facility, improving efficiency with a legal framework, to make sure that all these are revised and developed, to increase liquidity in the debt and equity capital markets, and embed information technology in key institutional processes, which will be followed through to full implementation. In this particular strategic plan, Ms. Rashmi has raised thought-provoking questions and discussion questions that will need to be addressed. And I'm so glad that the stakeholders are already part of this, and I'm sure answers and pathways to how these objectives will be achieved will be an issue of working together. With this plan, ladies and gentlemen, I am confident that CMA will play an even greater role in supporting the realization of the country's development agenda that is set out in the 3rd National Development Plan, where CMA is implementing partner in the Private Sector Development Plan and the Program Implementation Action Plan. On behalf of the Board of Directors, I wish once again to assure you of our commitment. We are committed to the full implementation of this strategic development plan that we are launching today. I therefore call upon all our stakeholders to work with us this journey. As we open up new opportunities and frontiers for development and regulations of Uganda's capital markets. Ladies and gentlemen, in conclusion, I would like to thank the Ministry of Finance, Planning and Economic Development for the policy and the financial support. Fellow board members, I want to appreciate and thank you for your commitment. You have been committed to make sure that this strategic development plan is approved, and I'm sure that I'm going to see more commitment even as we implement this. The CMA management and staff, you have done an amazing job, and I continue to thank you and appreciate your commitment, and even the commitment through this plan. And all our stakeholders that were consulted with the formulation of this new strategic development plan, we all together seek to transform Uganda to the middle income country. God bless you all. Thank you for listening to me. I would like now to take this opportunity to welcome our chief guest, who is representing the Permanent Secretary of Ministry of Finance, Planning and Economic Development, to launch the new 4-year strategic development plan. You're welcome. Thank you.
Ladies and gentlemen, a more hearty round of applause, please.
I think I can reach you. Can you? I put down the mask. Thank you, Master of Ceremonies. The board chair of the Capital Markets Authority, members of the board, the CEO, management and staff of the authority, and all protocol observed. As have been introduced already, I'm called Beka Tumwebaze Kanyanguga. I'm a principal economist, Minister of Finance, and I'm representing the Commissioner of Financial Services, who should have represented the PS. So I don't represent the PS, but I represent the Commissioner because that is the protocol. Thank you so much for inviting the Minister of Finance. The Minister of Finance is actually, I can call it a strategic partner in all things that CMA is doing. And we thank you, CMA, for all this time having been able to struggle and see that you achieve your strategic objectives. These include facilitate and promote the development of capital markets, enhance and regulate an orderly, fair and efficient capital markets, and enhance CMA's capital market and operational ecosystems. Operational systems. We congratulate you, CMA, for having implemented the old strategic plan, where, as we have already seen, you have achieved so many things. And now, we also congratulate you for having established a new plan, 2021-2022. We look forward for the new plan to achieve its objectives, among which is attracting more patient capital. And as you note, as we all note, this new plan comes at a time when almost everybody in the government is now focusing towards financing projects through the capital markets rather than the previous method of acquiring loans, because you know at what point our loan portfolio now is. So we hope that this is timely and it will help us as government implement the strategic or the projects that are ongoing, especially in the oil field. So we think that this new strategic plan will help attract or bring in more patient capital. As you all know, especially CMA and your staff and your management, government is committed to working with you in implementing the new plan. Currently, you know the policies we are working with of increasing listing in the Ghana's capital markets. We have gone a long way with you, and we hope we shall continue to implement that policy, in addition to what has been talked about as the broadband policy. As we continue implementing together this strategic plan, there are so many things we are doing together with you. We are currently working with you and Bank of Uganda to connect the two exchanges. This one, we hope we will improve the transparency in trading the treasury bills and bonds in the secondary market. I think that is very important. We have gone a long way. And two, we in the ministry, having worked with you in the other project of establishing a capital market infrastructure, we hope we shall implement it, because we understand that there is now testing. The implementers of the capital market infrastructure at the East African community have been carrying on testing with the Uganda Securities Exchange. So we hope with all those activities coming together with this new strategic development plan, we shall reach our goal of attracting more liquidity in the market. I thank you so much.
Before our guest of honor leaves, we're going to request kindly members of the board, please join us as we cut the tape and usher in a new era. Yeah, we have pair of scissors. Yeah, so you're going to get the scissors and cut the tape.
Okay.
Yes, please. If you could join us at the front. If you have a camera, this is the moment.
Just before that is done, I want to just quickly introduce the board members. Starting from the left-hand side, Mr. Martin Cheyune, hand clap. Manufacturers Association, Ms. Mercy Kaino Wisho, URSB, very well branded t-shirt. Mr. Muhammad Kalisa, Chamber of Commerce, you heard from our chairperson. So that is 4 out of 10 board members. Thank you very much.
Please. Here we go. Okay, please do the honors, sir.
So I say I hereby launch the card.
Yeah. Yeah. Yeah, request
So Ministry of Finance and CMA are happy to hereby launch the Capital Markets Authority Development Master Plan 2021, 22, 24, 25. Thank you.
request you to autograph it as well. Get some sanitizer. Yep. How can we do it? It's supposed to be in elbows. Thanks. I think so. Can I move this in front? Yep. Thank you very much. We're going to have a vote of thanks from the National Planning Authority before we disperse, please. Mr. Vincent Lowe.
Thank you, Director of Ceremonies. Thank you, Capital Markets Authority. I would like to congratulate the Capital Markets Authority for launching, for achieving this milestone. It is, as team leader of Private Sector Development Program of NDP3, Capital Markets Authority is among the first agencies to have launched their strategic plans as we move into the NDP3. Remember, we've already had 1 year left, and we are happy that they've aligned it to the timelines of the NDP3. That saves us a lot. The other thing that I can touch on is true, we are seeing all the key performance indicators that are attributed to the Capital Markets Authority in the NDP3, and that is good. And I'm also happy to report that we did have an input as National Planning Authority into this strategic plan, and a lot of our input has actually been captured. But overall, in terms of substance, in terms of what we want to deliver, or in terms of what we want the Private Sector Development Program to achieve, has been well captured. And this, I congratulate you, the board and the CEO. So thanks for the invitation, and I hope we implement what we say that we are going to implement, because the Achilles heel in this country is on implementation. So I wish you well in implementation, and I know that I'm part of the program working groups that follow up on progress reporting, and I will be there to put you to task to explain why things are not going the way they are going. Just like you keep on telling us, Mr. Kalijira, that it seems we set our target on the collective investment schemes assets under management TULO. I'll be there to really see that whether our target was lower than anticipated. Thank you.
Thank you very much, Vincent. And with that, ladies and gentlemen, we have come to the end of the program. Thank you very much for making the time. We have been live streamed on YouTube on the CMA Uganda handle, so we can always go back and rewatch this. At this point, I'd like to, on behalf of the CEO, thank you very much for making it to this occasion. We will be with you again next week on Tuesday for another exciting launch. From the NPA, we are already going to be putting this strategic plan to work as soon as next Tuesday. So thank you very much, and please have a very good rest of the day and a good weekend. Thank you so much.